All right. So here we are with one of the smartest, kindest, nicest women I know, Michelle Bosch. Welcome to She Talks Business.
Thank you so much, Lisa. I'm very excited, very honored. Thank you for having me. We were just talking right before that I'm excited to talk about a much more offensive play when it comes to money for women. We have always been, I think, indoctrinated into a much more of a defensive philosophy in terms of money management. And when it comes to investing, there's definitely a lot of opportunity out there for women. And I believe our courage hasn't caught up with that opportunity, and our knowledge and financial literacy sometimes, and just our understanding about all the possibilities when it comes to other asset classes besides the stock market when it comes to investing.
I'm thrilled to have you here. And, one of the reasons that I'm really happy to have you here is because you are a woman and you have a different perspective when it comes to money than men do. And a lot of women are not investing in land or real estate, doing the things that you're doing. So the reason that I asked you to be on the show is because, we've been talking a lot about money this season. And here's the thing. It takes money to make money. And sometimes once you start to make money, you don't know what to do with that money. So why don't we start by you just telling us a little bit about your company and your philosophy around investing. And then I have a bunch of questions for you.
Okay, sounds good. So, our investing journey, or my investing journey, and I say our there for a second, it's because, it's been a partnership, together with my husband. And in your case, if you're not yet married, your significant other, or just in general, at some point, money making and investing will become a family affair, a matter of the heart. And that's what makes us different, in terms of women, in money making and investing, is that we're thinking much more about others outside of us, as a reason and as a driver for investing. We're thinking about our communities. We're thinking about recirculating our wealth in some way, shape, or form. And we're thinking about generational wealth, or at least I think about that, and about my kids, and wealth in a much more holistic way, other than just assets and money, of course, but also the values that come with being a great steward of that money, and being able to make more money, following those same principles. For me, that's a much more holistic, I would say, wealth legacy that I would like to pass on to my daughter. But to answer your question, so because our journey follows, our investing, our investing career, I would like to, talk a little bit about that. I am an immigrant here into the US. I'm originally from Honduras. My husband's from Germany. So we're both immigrants here. We came here to study, just like everyone else, and is being told to go get a job and then go work however many years on that job, and think about what your number is, and this big pile of money, number, and you're working all these years towards this pile of money. Well, like 3 or 4 years into it, Lisa, we were like exhausted. We had no freedom, no fulfillment. Our paychecks did not match the time and effort that we were putting into those jobs. And we thought there's got to be something different,
A better way.
A better way, for sure. We were both traveling 100%. We weren't able to see each other. We had 40 hours by Wednesday, so we were doing sometimes 60, 70, 80-hour weeks and working for someone else. And yes, we were paying the bills, but we weren't really getting ahead, not like we thought we were going to, and what the American dream was supposed to be, and we're like, we looked at each other and we're like, we got to reset and come up with our own American dream of, of what that looks like. And for us, it looked a lot like freedom of money, time, relationships, and purpose. And so at the beginning, it was, getting out of our jobs, and we stumbled within real estate into an asset class, land, that is normally not really thought of. Yeah. And when everyone thinks about land, well, land, you have to be wealthy in order to invest in land, or you have to, when you do land banking, or it doesn't cash flow. And for us, we stumbled into an area of land, of properties anywhere between $10,000 and $500,000 that we could pick up for 10 to 40 cents on the dollar, and then immediately wholesale them for 60-80% of market value, and make basically quick cash wholesale profits from that land. And that became our active income. I want to start talking a little bit about financial literacy in general, and that became our cash machine. That became our profit and loss, our P&L wealth. Yeah, the one where you have to exchange hours for dollars, because if we didn't find sellers, and if we didn't negotiate with sellers, and if we didn't find buyers and sold the pieces of land, then there was no money coming in.
Right.
And so from that, we were able to, using that as an engine, we were able to get rid of our jobs. In the beginning, it had to be a side hustle. Our green cards depended on our jobs. So, but eventually we were able to grow that to the point where we're like, okay, by the time we had our green card, we're like, okay, we're ready to let our jobs go. And we haven't looked back since. Eventually though, we start recognizing that we're whenever you're doing active income, and active income for you, if you're listening to this, if you're a professional, a high-paid professional, maybe a doctor, a lawyer, somebody in corporate, that's usually your job. Or if you're a business owner, it's your business. That's the active income. If you don't go out there and do lead gen and convert those, those leads into sales and into revenue, and then, deliver to the client, there's no money coming in. And that's what we recognize, that land, that asset class was for us, even though we were able to build that company to 8 figures and create $70,000 of passive income with it. And how we did that is by using seller financing. Somebody buys a piece of land from me for $50,000. They give me $10,000 down. And then for the next 5 to 10 years, they start making payments of anywhere between $300 and $500. And so that's
so you became the bank.
Yeah, we became the bank. And how we became, but we came to the, to the realization that after those 5-10 years of the duration of that note or that mortgage, that those people were going to pay them off, and our residual income, our passive income, was going to go away. So we started then investing in single family homes. We started doing it here in Phoenix, Arizona in 2009. The market was at the bottom, and it made complete sense for us to buy, $50,000 homes that we could repair for another 10, 15 and rent them for $1,100. And we started basically continuing our cash machine of land flips and taking those active profits or that active cash into single family homes that we were holding for long term. Yeah. And then eventually in 2016, we're like, okay, we're doing this one door at a time. Why don't we start looking at 100 doors at a time? And we started investing in large multifamily. We syndicate now. And to this day, land continues being my cash machine, for active income. And then we pass that into other asset classes within real estate, specifically multifamily right now. And that is my balance sheet wealth. This is assets that, in the beginning, we had to syndicate with investors. And now we're at a position for every third, syndication, or second or third, we're able to buy it outright ourselves without investors. But we still continue to do syndications. But that means that now, for my daughter, Sophia, it means that there is an asset that can be passed on, if God forbid, Jack and I were, to be gone. And I don't know,
or even later in life, you just want to give her an asset. A friend of mine, a colleague of mine in Ottawa, she did something similar years and years ago. She started buying rental income properties, and over time, she had 15 different rental income properties, and she was buying them when it was like 0 down or like, 5% down. And other people have paid the rent and paid the mortgages on those 15 properties. So now her net worth is tied up in 15 properties that have all grown in value over the last few decades. And, she said to me one day, she said, it's great. It's our retirement income. And if I want, I can just give each of my kids a house, and that starts them in this industry of owning real estate as well. So I think it's a beautiful thing. But here's what I want to understand. So Talk to me a little bit more about land. So you talk about flipping land, but you talked about it so fast that you lost me. So you said you bought land for basically pennies on the dollar. So you
Mhm.
buy a piece of land for 10,000 and then you would sell it to somebody, let's say for 20,000, but you would take a deposit on the 20,000 and then they would pay you over a period of time to pay back the land. But because you have sold it to them for more than what you initially paid, a lot of that money is free and clear because your initial investment is paid off quite quickly. Am I understanding what you said the right
That
way?
is exactly right. That is exactly right. And there is something beautiful here that I, perhaps if I can expand without, losing our audience, is the fact that let's take an example of a property that is worth $50,000, just for easy math. I'm able to usually pick up something that is worth 50,000 for anywhere between $5,000 and $10,000. Let's say I pick it up for $10,000. And that is what I have it under contract with my seller. When I go and try to sell it myself and I'm looking for buyers, I can decide whether I'm going to just flip it for some quick cash for the 20 grand that you were talking about and make $10,000 quickly in my pocket, in a matter of under 30 days, or I can decide to do seller financing for the purposes of creating passive income. And what I typically would do in this situation is I would do double escrow. I have not purchased the property. I have it just under contract. I find myself a buyer that is willing to buy with a down payment of $10,000. And now the buyer's $10,000 are being used to pay the seller his $10,000.
So you're basically selling the property before you even bought the property.
Exactly. So I'm using
So I
something.
did that years ago. When my husband and I bought rental properties. We owned a couple of rental properties with another couple years and years ago in Ottawa. And I said to my husband, before we buy these properties, let's put an ad in the newspaper and look for people who want to rent. And so we literally were able to get tenants before we did the deal. So we knew that the property we were buying was actually rentable.
Yeah,
So
I mean,
it's kind of
so
the same
many,
thing.
and this big time developers have always done this. They have always either pre-leased or pre-sold before they even start construction. It's the
Right.
same principle here, the exact same principle, in your
Proof of
strategies
concept.
to use. Yeah, exactly.
Proof of concept. I tell people all the time, I call it, in my business, I call it invitation marketing. I say, if you can't sell something without a sales page, it's probably not worth creating a sales page for, because selling is a transfer of belief. And so if I have an idea, I use my beach house as an idea. I put this thing up on Facebook. I'm going to rent a mansion on the beach and I've got 10 rooms and I want to bring, 10 women together and we're going to do this and this and this and this. If you're interested, let me know. I have already paid for the beach house before I even rent the beach house because I already have people saying, I'm in, but I didn't spend a dime before I collected the money. And I think
Isn't
that
that
is
just like beautiful? It's like arbitrage. It's
yeah.
yeah.
But people are like, well, whoa, what happens if the house gets rented? Well, I contacted them and I said, I'm interested in renting this house, but I need a couple of days because I want to, invite a bunch of people and I need to make sure they're all in before I give you the deposit. Will you hold it for me for 72 hours so I can find out? Yeah, no problem. If we have somebody else who wants it though, we're going to reach out to you and we'll give you, like, you can firm up right away or you can let it go. But people are willing to work with you on things. You just have to be brave enough to ask.
Yeah, absolutely. Absolutely. And I think before you decide that, you want to go and start doing this, I think there's something very important, Lisa, that I think women in general, or just people in general that are looking to invest, need to make a distinction. They need to decide whether they're going to become, if they're going to be active investors or they're going to be passive investors. What we're talking about here in the land is a lot of active, like you're hustling, you're doing marketing, you're doing lead gen to get sellers, on board. You're, putting the newspaper ad to make sure that you find, tenants before, you go through with the purchase and so on and so forth. It's all very active. And so that's one way to go about it. And then the other way is to decide whether you want to be much more of a passive investor, that, if that is your route, then I want to bring back this concept that I think I briefly mentioned at the beginning, which was, financial planners in general tell us to think about what is your number and this big pile of money. And people always think, well, I want to go out there and make, $50 million or $100 million without really understanding number one, why they want that. And is that really the level of investing or scale for their investing that they really need? When in fact, when you think about it, and we have kind of like broken our journey into 3 parts, and that is, we first put in our security plan in place, and our security plan meant about $7,000 of passive income that needed to come from real estate. If you think about it, $7,000 for that security plan meant for us really $84,000 a year. $84,000 a year. If you're a passive investor, that's only if your money is making a 15% return. That's about $560,000, not 10 million, not 50 million, just about $560,000 that needs to go into an asset that is producing 15% return.
Exactly. And that's such, like, I'm sorry, I get so excited because it's like money makes money. And so we think that we need more money than we need to actually generate the money that we need to live. So I love what you're saying is you don't need millions of dollars. If you're investing that way and generating that type of return, you have just built security for your future indefinitely, as long as you keep that cash machine going, right?
Yeah. And for most Americans, $7,000 is usually taking care of, a minimum housing. I'm not talking your luxury home. I'm talking maybe a 1,500 square foot home, 3 bedroom, 2 bath. It's paying for your mortgage. It's paying for insurance. It's paying for maybe, a vacation up to Sedona here for the week. It's not something extravagant, but it's something where that if the bus would hit you, that you wouldn't have to make financial decisions out of despair, because at least the minimum, of your lifestyle has been taken care of. The next step of that is really, okay, if that was my security plan, what does my comfort plan look like in terms of money? Usually for people, again, for the typical American family, that's anywhere between 12 and 15,000. So for easy math, let's think about 14,000, which is twice the $7,000 that I had talked about earlier. At 15%, that is $840 something thousand. Not 10 million, not 50 million that needs to be invested.
It's under $1 million.
Yeah, exactly. Under $1 million to create that kind of passive income.
But let's stop for a second though, because you and I say that it's under $1 million, no big deal. But there are people listening. They're like, okay, you rich ladies, I don't even have $10,000 in the bank. Now, I know that you came from humble beginnings. You were raised by a single mom. I came from humble beginnings. So what do you say to the person who's listening right now? They're like, I'd be happy if I had $10,000 in my bank account, let alone $15,000 a month. Where do I start?
And then you need to start being an active investor. There's no way around it. Like, you need to figure out a cash machine that spits out cash, excess of what you need to live off right now in order to start investing in something more passively.
Right. The active feeds the passive.
The active feeds the passive. Absolutely. Eventually, the passive will be creating so much income that with that, you can go and start investing more and keep those dollars in kind of like the investing wheel. I always say, like, once my dollars have made it into an asset and they're being invested and they're inside of this wheel, they never come out. I always like to think of it as, they're now my army, my soldiers, and they go out there and bring back more prisoners. And I love it. Hey, let's talk about not just, the king here and this is probably, coming from my husband, he's from Germany, and there's so many castles everywhere you go when you drive across Germany, and, with moats and everything. So I'm making the analogy probably because of that, but let's forget about the king. Let's talk about being queens here. And let's talk about basically our investing dollars going out there and making us more. That's exactly what you would be doing in active income. If you were generating active income through land flips, for example, you would basically be, putting $10,000, to then go and sell a property for $50,000 and so on and so forth, and you might not even have to really, have that cash outlay if you do what we just described, which is a double escrow, or assignment of deals, and you can get started that way. But I want to say something though, Lisa, is that sometimes what I have noticed, in many years now syndicating apartments, is that sometimes people say, I only have, what's your minimum investment? Because I only have $50,000 or $100,000, to invest. And then I ask them, well, do you have a Roth IRA, or do you have any retirement funds? And they're like, oh yeah, I have this with, that I've been building up for the last, I don't know how many years, and it has $700,000, $800,000, And what I have noticed is that most of that has been in IRAs that are investing in the stock market.
Yeah.
And there's a distinction between that kind of an IRA and what we like to call here in the real estate world a self-directed IRA, where you're basically directing into which kind of investments you're going to be using some of those funds. And so I've had people that are actually, flipping land inside of their IRA, turbocharging that retirement fund, and then using those funds as well to then invest passively in multifamily. So sometimes we think, because you don't typically have access, because they have typically been used for investing in, in the stock market, you might have, retirement funds that if you were to transfer those into a self-directed IRA, you can start turbocharging and really growing that at a much quicker pace, and where you have much more control versus just being at the mercy of what the market is doing in terms of volatility, and so on and so forth. Right. So that's another thing that I wanted to throw in there.
Yeah, I love it. I love the active aspect of generating cash now. And I talk about that a lot in my coaching business. If you don't know how to generate income, that's like one of the first things you need to learn how to do in business is you have to be able to generate. If you can't generate, you don't really have a business.
Yeah.
And then I love the idea of taking that income that you generate and putting it intentionally into something that can create passive income for you. And one of the things that I always say to you is, or not to you, that I say to my clients is there's nothing passive about passive income. It really does require that active participation in the beginning to generate what you need to be able to drive the passive income. So it's a myth that you can just create passive income without having to do anything. You have to do something to get the money, to get the machine going. You need to pay attention to your army to make sure they're actually bringing back exactly. Prisoners, and it's not going to work.
Yeah. And that's where for us, now that's where having a team in place, really plays a role. I have two in our multifamily side, we have two acquisition managers. We have also, an investor relations person. I also have a person whose whole job is just asset management. And together with, Jack and I, we are the ones that are meeting then with our regional managers for each of the property management companies, that helps us manage that asset on the ground every single week. We're having to sometimes travel, to those markets to make sure that if we're doing a big repair, that it's happening like it's supposed to be happening. So yeah, there is asset management involved. There is, like you said, making sure that we're getting return on our money, that, vacancy rates are where at the lowest possible, that economic occupancy rates are at the highest possible, that we're, minimizing expenses, that we're operating this asset basically in the most efficient way, because for every $100,000 of NOI or net operating income that I'm able to improve this property on that I buy, I'm adding, a 10x multiple to the value of the asset, and therefore to my net worth and to, profitability when I decide to exit out of this this particular asset, or decide to sell. For example, here in Oklahoma City, we held a property for 3.5 years. We bought it at 6.2. We sold it for 10.4. And yes, that's a $4 million play, in a course of 3 years. But there was this active, participation of us making sure that, that asset is being operated at the level that we need to in order for the net operating income to improve over the course of those 3 years. So yes, there's definitely that.
Let's talk about that a little bit, because obviously during COVID, a lot of properties went up in value, with people not necessarily having to work from work. People were able to work from home. We saw a lot of people, a lot of property values going up. I mean, in Florida, our home tripled in value from when we bought it in 2012 to when we sold it at the end of 2022. So there's a lot of, interest rates have gone up like what, 12, 14 times over the last little while, every couple of weeks or every month. And there's talk of a recession and house prices falling. So tell me where you see the opportunity and where you see the risk right now.
Okay. So from the opportunity for me on the multifamily side, that means that people that had basically what is called bridge financing or mezzanine debt, whose interest rates are adjusting basically and are those loans are coming due. All of a sudden, if those properties were producing income and their underwriting basically didn't account for a crazy increase of interest rate, those people are going to sadly, probably not be able to refinance those properties and are going to have to be forced to sell.
Right, because they can't service the debt.
They cannot service the debt, absolutely. And so and it's not because the property is not spitting income that they're going to lose the property, or that they're being bad operators. It's just that basically there's not enough income that property is producing to be able to pay for that higher interest rate.
Right. The math doesn't work anymore.
Exactly. It does not. And so for people like us that are continuing to buy, and, it's going to give us an opportunity to go out there and, get a hold of some properties that would otherwise, we would have not had access. And we are going to be able, to buy those at a much lower price, or higher cap rate, and operate, and then, at some point either decide whether we want to exit out of that or, hold long term. There's some of of our apartment buildings that we decide to hold long term. I have 94 units in North Carolina that, we'll probably always own. That's kind of like our comfort plan in place, at the level that we have decided that, our comfort plan looks like. It's a little bit higher than the 15,000 that I was talking about. But, I'm always on this constant evolution of growth. So I also, behind that comfort plan, I also have an ultra luxury plan, that I'm working for. I
want the ultra luxury plan. Let me in on that.
Yeah, this is usually anywhere between $500 and $100,000 and $50,000 and $100,000 in passive income from assets a year, and it could be bigger. It could be higher than that for you, but about $1 million basically on passive income from assets. And it could mean that, you're no longer traveling economy, that you're, traveling business. Maybe for you, it might look like, you're traveling private, and it for so many people that luxury plan could look different. But for us, it means if we go to Europe, I would love to, lay down horizontal for the 11.5-hour flight that, that flight is here from Phoenix to London, and then from London to Frankfurt, where, we usually travel to, or to Zurich, Switzerland. And that we're able to have access to, to 5-star accommodations, that we don't have to, look at, whether Uber charges me extra fees, to deliver a meal because I'm trying to, stretch every dollar that I can. And so it gives me the opportunity also to, like, for example, earlier this year, I was, I had a medical scare and I was not feeling very well. And I had to be in Germany for almost 6 weeks getting treatment. And that meant for me that I didn't have to, nothing in my life changed because, my security and comfort plan are in place when it comes to taking care of expenses. Nothing was going to happen because I couldn't be actively creating income during those 6 or 7 weeks. So there's that aspect of also creating wealth, not necessarily, for a time of a medical emergency or something like that, but also for times where you want to enter perhaps and cut out your year into seasons of production, seasons of planning, and seasons of play. And for example, summer for us is a season of play, and I can take the entire 2.5, 3 months off that Sophia's off from school, my daughter, and go out there and play and travel the world and do, whatever. So, so it's those reasons. It's being able to step into that vision of wealth today, not later when I'm too old, when I'm too sick, when I'm, burned out, but being able to step into that. And yeah, there was a season of hard work and hustle, in creating that active income at the beginning. But once you're out of that phase, and it can be as quick as 18 months. For us, we put the pedal to the metal in 18 months. And in 18 months, we had that security plan in place. Yeah. And so I'm not saying it's going to happen overnight, but I'm just saying that, for a person out there over the course of the next 3 to 5 years could see all 3 plans, the security, the comfort, and the luxury plan in place. If you get excited about this, if you get, if you have whys that are big enough that make you want to start looking and make you want to start growing, because what's going to happen is that, or at least in my experience, is that as I have gone through this journey, it has not just been a journey of asset accumulation or wealth accumulation, but it has been an incredible journey of becoming, of self-development, of self-actualization, of really understanding my whys and my vision for the future, and the things that I want to do and how I want to, live my life. So it's turned into that, as you go along. And I know that I love growing, that I love learning, that I love, that there's so much more out there that I don't know than the things I do know. And I'm a curious person. So I think that
It's
curiosity,
so important.
probably plays a role as well. And then more than anything, I think it, for me, you alluded a little bit earlier, I was raised by, my mom raised me as a single mom. My father passed away when I was very young. And I saw my mom, with an elementary salary, with the salary of an elementary teacher, really trying to make ends meet and not being able to do a lot of things and not being able to afford a lot of things. And so it for me, it's also important now that she's in her old age to, to give back. I'm thinking here, I'm kind of like this sandwich generation that is thinking about the generation before me, and helping care for her. And I'm thinking also of the generation after to give her a leg up and a start, so that she doesn't have to start at ground zero like I started, but she can kind of like stand on my shoulders, and from there, keep growing and feel confident about money, about investing, about how to making more of it, how to make more of it without necessarily a whole lot of, grind and hustle.
But don't you think that some of that grind and hustle is important?
It is important.
You make it too easy for your daughter. Is she going to appreciate it?
No. It is important. And as a matter of fact, right now she started her first mailing for land flips. And a week ago, she made her first offer for land, in her little land business. And so, yeah, this is part of, teaching her, but basically she's starting now with somebody that has the knowledge, that is having conversations constantly around the house about money, about how to, what a good deal looks like. What does, a bad differentiate between a bad deal and a good deal, being able to see those things. And so what I'm saying is she's not starting at ground zero, Lisa, like I started. And she'll still have to hustle and grind, but probably not to the level that I did when, I had none of that.
Right. Her challenges will be different.
Yeah, they'll be, they will be. And our plan for her is that, I want her to know how to make her own money, invest her own money, and recognize that a man is not a plan.
Yes. Yes. I
Because,
hear.
and not just because of divorce or, or a bad relationship, but, a death, like it happened,
Yeah,
in my own family.
anything. But
Yeah.
it's also, I always say I'm in my relationship with my husband because I want to be, not because I have to be. And I think that is also, it's a financial thing. A lot of women are in relationships because they feel like they have to be, because they feel like they can't afford not to be. And so if you are raising a daughter that can generate her income and create her own wealth, then she will always have independent choice to be with who she wants to be. So let's double back. I have two more questions for you before we wrap up. The first question is, what is the risk that's coming?
The risk.
We talked about the opportunity. Now I want to know what you see as a risk right now.
I mean, the risk is that perhaps you don't have enough access to cash right now in order to go and capitalize on the opportunity. That would be, a risk. And maybe a risk would be that, I don't know, if you're in a corporate job, that you are going to lose, a job, and that might mean sometimes indirectly the universe directing your steps towards something else, so is it really a risk? I don't know. That could also be an opportunity, to do something new. But if you're in that category, my biggest, recommendation would be to go and look for plan B and some kind of a side hustle that can protect you from that, and that you can build up. Like I see it many times, over in our coaching company of students that are basically within a matter of 18 to 24 months able to replace their income. And I'm not talking just small income, but people that have an engineering background, people with dental practices, lawyers, that are high income earners, and that are able to basically replace one, their paycheck, with this other thing as a plan B, and eventually if you love what you're doing, and and nobody's losing a job, you can continue to do both of this and use the excess cash profits, from your side hustle to start investing and actually own the assets, and so on and so forth. So I think that could be a risk right now for somebody, that is in this I would say efforts economy. When you have a job, I always say you're in the efforts economy. When you have when you're a business owner, you're in the results economy. And so for somebody in the efforts economy, I can see that.
So my last question for you is, you guys have built this amazing real estate company, I'm going to call it, where you have, you flip land, you generate cash from land, you invest in properties, you've got passive income, you've got all this good stuff going on, but you also coach people and teach them how to do it.
Yeah.
So why did you choose to do that?
That's because that's my legacy, Lisa. When you start taking care of all of your immediate needs, medium term and then long-term needs, I think that as a human, we have this need for love and connection. We have this need for certainty. Sometimes we have also a need for uncertainty, for variety. Yeah? We have a need for significance, and once a lot of those needs have been taken care of, what you're going to find is that there's going to be a need that continues to be unmet, and that it's going to be like a yearning of the heart of contribution. And for us, this country has been transformational. Real estate inside of this country has been transformational to us. And we would love to pass on that transformation to others. So that's how this whole coaching, company started, is like, my goodness, if we were in that rat race, of corporate America stuck, I'm pretty sure that there's others that feel like we did. And why not share it with others, So that's kind of like, if I think about the land flipping as my, income statement wealth, and my multifamily as my balance sheet wealth, I think of the coaching company as kind of like my spiritual wealth. It's like that legacy of wanting to see other people succeed and see other people overcome, and not doing it from ground zero again, like we did, but with a few things already in place that will help you navigate the emotional roller coaster that it is to be an entrepreneur. Because when you decide to start investing full time and, building a real estate investing business, I mean, you're a full blown entrepreneur, and that comes with a whole lot of challenges. And if I can remove some of those challenges, and not that you're not going to have them, but you're all of a sudden being able to rest in the strength of someone that has had the experience, that can give you all the templates, all the formulas, all the processes, all
shortcut it.
Yeah, exactly. You kind of collapse time for that person, and it doesn't take them, 3 years of trial and error like it did for us while we still had our corporate jobs, but it really shortens that learning curve for sure. And I'm able to see women, come and, reach out to me and say, Michelle, I went from being a stay-at-home mom, homeschooling my kids. My boys are now teenagers. And I felt like, I didn't exist because I know that was a big contribution to the family, but because I wasn't contributing income wise, to the family, I felt like, that my value was not there. And to be able to create in a matter of 14 months, like I have a gal right now, her name is Mahialani Winters. She's out in the big island of Hawaii. She's flipping land here in the mainland. So she's basically flipping the land without seeing it, because you can see everything on GI, on satellite views. You don't need to be in the place where you're investing. And she's like, and Michelle, in 14 months, I've been able to create $412,000. And I have been able to fall in love with myself again, with my capabilities. I have grown in my confidence so much. I am able to contribute, to the family income as well. I can see so many things that seemed like a distant future, maybe 10 years away, as possible, like right now in such a short period of time. And that, Lisa, gives me so much more fulfillment. Yes, doing a big flip like the one that I talked about with multifamily of $4 million is amazing. It's great. And it's awesome because that you're winning the game, but more fulfillment than Mahialani telling me about she falling in love with her life again. I don't think you can beat that. It's just, it's fantastic. It's amazing to see that. It's amazing to see a lady, her name is Anila, going from being, as a dentist, stuck with being in her practice every single day, pretty much, in people's mouths, with backache, with neck pain, with shoulder pain, and so on and so forth. And she going from that to being able to sell her practice, is a full-time investor, is traveling the world right now.
Awesome.
And so
you're changing lives.
It's incredibly rewarding.
Yeah.
So that need for contribution and to leave basically an imprint in the universe of courage, of confidence. It definitely fuels you and makes you want to continue doing more. I think what happens is that money at the end of the day amplifies who you are to begin with. And all of us, have amazing whys to go out there and start doing something and start a side hustle, not out of greed, not out of like wanting to show off, to your neighbors or to your friends, but out of, something that matters, that is important to your heart. And so, yeah.
That's awesome.
Thank you, Michelle. I hope that answered the question.
Yes, it's a perfect segue, for us to wrap up. If people want to learn more, they can go to landprofitfund.com, correct?
Yes. Landprofitfund.com.
Yeah. And I think that, you have just been so generous, and I love that you are I love the way you talk about money. You're inspiring me to get some money in my own and start investing differently. Because, I've been kind of sitting and wondering and waiting and watching, and I think it's, time to do some stuff. So
Yeah.
thank you for everything that you shared with us today. You are definitely an inspiration for women out there that want to learn how to invest, that want to learn how to create their safety net. They want to be able to create that luxury lifestyle for themselves down the road. And, what you and your husband have done is proof that it's possible. And, I
Yeah.
feel a little bit like you, we're living in Florida full time right now. And, I feel like, we're tapping into the American dream as well and seeing what the possibilities and potential really are for us in this country, which feels really amazing.
Yes, absolutely. Yeah.
Yes.
Well, thank you so much, Lisa. It was a pleasure. And yes, if anyone wants to connect with me, Land Profit Fund or michellebosch.com as well.
Awesome.
You can connect with me. And I actually answer my own DMs.
That's
If
amazing.
you reach
Yeah,
out
I
to me
talked to you on
social media.
Instagram. And you just celebrated your 22nd wedding anniversary, and ours is in a couple of months. So we're on the same, we both got married in 2001.
Yes, yes, yes. Well,
Yes.
yeah. Well, thank you
22
so much.
years. Thank
Yeah.
you, Michelle. It's been great seeing you, and I really appreciate you being a guest. If you're listening, I hope you had a pen and paper. If not, you're going to need another one to listen to this again, because there were so many great nuggets that Michelle shared. So thank you for listening, and we'll see you again next time.